Good afternoon, subscribers, but particularly good afternoon to Year 10, because it is Year 10 to whom I am referencing and talking to in this particular video. So, I gave you last week the very first evaluate question, which you've covered in your GCSE economics course, and of course the directive word, the command word, evaluate, means that we are talking about answering an essay-style question. And I gave you the Geekonomics formula for success for that particular essay-style question just the other day. And I'm delighted to say that you have followed that very well, so that's really pleasing. So I want to talk about 4 things which have been done tremendously well in the majority of answers. And then I'm going to point out 3 things that many of you need to improve and will need to correct when I give you your scripts back, your homeworks back on Thursday. So let's talk about the good first of all. So what's been done really well? So number 1 is that you have followed that very precise and concise structure which I gave you in order to answer an evaluate question. So I'll not go through all that again because we've talked about it in class, but that's really pleasing to see. So well done for that. Number 2, great use of signposting. Remember, it's more likely that if you keep the examiner happy by making it very clear, here's the argument on the one hand, here's the argument on the other hand, here's my diagram, here's my explanation, here's my conclusion. So if you signpost it in that way and set it out really clearly, an examiner, even if they're marking the first script or the 1000th script, difficult to say that, the 1000th script, will be just as likely to give you the same mark because it's so clear and precise and concise. That's really good. Definitions have been done really well, so I'd expect that from students of your calibre, so that's good. And then finally, nice frequency of diagrams, although that could be improved, but generally speaking, you've all attempted at least to include 1 diagram. You really need 2 here, but at least we've got the bare minimum of 1, so that's nice to see. Okay, what about the things which I'm referring to here as a work in progress, a WIP? Well, the WIPs, ladies and gents, are as follows. The things which you need to improve in order to just raise the bar are as follows. Number 1, your explanation of the diagrams. Too many of you, and this happens at A level and GCSE, you draw a diagram and you expect me to look at it and to know what your message is from that diagram. And of course I do, but you need to explain to the examiner in the exam that you understand said diagram. So, if you're going to draw, let's say for example, very straightforward diagram like this, price and quantity. Remember your labels, so if you've forgotten labels on these, price, quantity, demand, etc. And then you're showing a price change. Don't just draw the diagram and expect me to interpret that on your behalf. You need to interpret that. So you need to be saying, as we can see in the diagram, an increase in price leads to a reduction in demand. The reduction in demand is going from Q1 to Q2. This is very small. Remember we talked the other day, large change in price, small change in quantity. So large change in price, vertical, small change in quantity, horizontal. You need to explain that. It's not up to me to interpret that on your behalf. So bear that in mind. NB, as we talked about the other day. Note well, nota bene. Next thing. Elasticity. Elasticity. Now, lots of you have referenced this in your answer, which is great. But, and here's the but. When we're talking about elasticity of demand, we're saying that demand is sensitive to price. Okay? So in this case, demand is not sensitive to price because when the price has gone up, demand hasn't changed a lot. Now it has changed a bit. Some of you said it didn't change at all. It has. It's gone from Q1 to Q2. But it's not changed a lot. It's small, remember? And so we say that demand is price either elastic or inelastic. In this instance, we would be saying that price is demand inelastic. So bear that in mind. The more complicated diagram, which some of you did draw, which was excellent to see. So it was, you drew this one, where we have a much more sensitive demand curve. So Q1 drops off very much whenever price goes up from P1 to P2. So that's another one you could draw. And the more complicated of all of those, of course, is the diagram that you would really need to get used to drawing, where we are shifting supply to S1, and remember we called S2 S1 plus tax. Now again, it's not sufficient to just draw that and expect me to interpret that on your behalf. You need to interpret that for me. So you need to explain that in full. How would you do that? Okay, we do this. Initial equilibrium is at A, where price is P1 and quantity demanded and supplied is Q1. An increase in price from P1 to P2 is caused by a shift of the supply curve to the left. Supply shifts S1 to S2, forming a new equilibrium at B, where price has risen to P2 and quantity demanded and supplied has fallen to Q2. That would be a fuller explanation of this diagram, ladies and gentlemen, so bear that in mind. And then finally, number 3, when we get to the conclusions, maybe it's because some of you are running out of a bit of steam and a bit of enthusiasm when you get to the end of this question, but remember, don't be saying, in my view, in my opinion, it's all got to be evidence-based. So it was nice to see some people had done some of their own additional research and not just relied upon the research that I had given you. So do remember, conclusions need to be backed up by data, ladies and gents. Okay, I look forward to speaking with you all on Thursday in person about this, and this will be your homework for next week. Bye for now.